Welcome to Griffonomics. So I want you to imagine a police officer who is just finishing up this incredibly chaotic, adrenaline-fueled 12-hour shift.
Yeah, which is exhausting on its own.
Right, exactly. And in the past, that officer would pull back into the precinct, grab some terrible cup of coffee, and then face like 3 to 4 more hours just hunting and pecking at a keyboard.
Just trying to remember exactly what happened at 2 in the morning.
Yeah, trying to remember the exact phrasing someone used during a domestic dispute. But today, that same officer just sits in their cruiser, and AI scans the audio transcript from their body-worn camera, and a legally sound, highly accurate first draft of the police report basically writes itself in a matter of seconds. We're looking at the company making that a reality.
It is a profound shift. I mean, it goes far beyond just saving a few hours of typing. We're really looking at a story that completely redefines a massive sector of the global economy. And while it centers around a company that, honestly, most people still fundamentally misunderstand.
And that is exactly the core of our mission today. We are executing a granular investigative report and really an actionable investment roadmap, exploring a deep dive into Axon Enterprise. Because, if you ask the average person on the street what Axon does, they will just tell you they're a hardware vendor.
Right, they make the taser.
Exactly. They make stun guns, end of story.
Yeah.
But when you strip away that public perception and actually look at the data, the financial filings, the product roadmap, and the sheer scale of their market dominance today in 2026, you realize that the stun gun maker label is completely detached from reality.
Completely detached. I mean, the overarching narrative we have to map out for you today is Axon's evolution from a niche physical hardware vendor into this high-margin public safety operating system. They're no longer just selling physical incapacitation.
Right, that's the old paradigm.
Exactly. Today, they are selling legal accountability, they're selling risk management, and most importantly, they are providing unparalleled data structuring for an entire global industry. They've essentially moved out of the purely physical realm of law enforcement and have built the invisible digital infrastructure that actually runs the modern justice system.
Okay, let's unpack this because the scale of the transformation we are looking at here is just staggering. We are going to examine their AI era plan, which is actively changing the daily workflow and the labor economics of police departments.
And we are going to tear down their modernization of 911 dispatch, too.
Yeah, taking systems that have literally been stuck in the 1980s and dragging them into the cloud. And we will explore the basically impenetrable strategic moat they have built on top of petabytes of sensitive, legally binding evidence. This isn't just about selling a new gadget, It is about building an entire ecosystem that a municipality simply cannot function without.
And for anyone managing a portfolio or just trying to understand the mechanics of elite businesses, this is the ultimate case study. Whether you are an investor looking for a high-conviction defense tech play or you are just a learner fascinated by total business transformations, Axon's playbook is mandatory reading.
For sure.
Their evolution from relying on unpredictable one-time capital expenditures to securing highly predictable recurring operating expenses is a masterclass in modern SaaS economics. I mean, they didn't just participate in an industry, they completely rewired its financial mechanics to their own advantage.
Yeah, and to really grasp how they pulled off that rewiring, we have to look at the historical friction of municipal budgeting. So let's wind the clock back a bit to understand the original business model, which was honestly essentially a hardware trap. Back in the day, selling tasers was a one-time transaction.
A classic capital expenditure, or CapEx.
Right. A police department would buy a batch of hardware, and that was it.
And CapEx in municipal government is an absolute nightmare for a sales team. It is highly volatile. Imagine you are an Axon sales rep in the early 2000s. You are selling a physical device that has a functional lifespan of roughly maybe 5 years.
So you make the sale, and then what?
Well, you land a major contract, you outfit a city with tasers, and then you effectively have to sit on your hands and wait half a decade to make another major sale to that exact same client.
Because you literally have to wait for the hardware to physically degrade or just become totally obsolete before the city will even consider writing another check.
Right, and when that 5-year mark finally hits, the process is agonizing. The police chief has to go to the city council and fight for what is called surplus budget.
Which is basically the financial equivalent of fighting over scraps. I mean, municipal budgeting is driven by tax cycles, property assessments, local politics, which are all notoriously unpredictable.
Oh, highly unpredictable.
A city manager looks at the normal operating expenses, right? Paying the teachers, fixing the potholes, keeping the streetlights on, funding the pensions. If, by some miracle, there is money left over after all of those critical operating expenses are met, that is the surplus. And Axon's sales reps were constantly fighting against every other special project in the city just to get a fraction of that unpredictable surplus.
It was an exhausting, inefficient, and highly cyclical sales process. You would have massive boom years when a big city had a budget surplus, followed by brutal lean years when tax revenues dried up. It is basically impossible to build a consistently compounding, high-valuation business on that kind of foundation.
So they had to change the game.
Exactly. So Axon made a structural pivot. They transitioned to a multi-year subscription model. They moved out of the volatile CapEx Thunderdome and embedded themselves firmly into the stable, recurring OpEx, the operating expense budgets of police departments.
They took the classic razor and blade strategy and adapted it for municipal government.
Right, razor and blade 2.0.
Yeah, in the traditional model, a company sells you the razor handle at cost, or even at a loss, to lock you into buying their proprietary high-margin replacement blades for the rest of your life. Axon just digitized that concept. The razor is the hardware, the tasers on the duty belt, the body-worn cameras on the chest, the fleet cameras in the cruisers.
That hardware acts as the physical wedge.
Exactly. But the blade, where the astronomical margins and the real value reside, is the software. It is Evidence.com, their cloud storage platform, and a digital suite that manages every single byte of data those physical sensors capture.
The hardware operates at a lower margin, but it captures the data. The software subscriptions manage the data, and those subscriptions are incredibly high margin and, quite frankly, unbelievably sticky.
Well, hold on. I want to challenge this concept of lock-in for a second. Because according to our sources, Axon is signing these municipal departments to 5-year and increasingly 10-year contracts.
Yeah, 10 years is becoming the standard.
Right. So from the outside looking in, why would a city council ever agree to be locked into a 10-year contract for technology?
Right.
It sounds like financial quicksand. I mean, if a telecom company asked you to sign a 10-year contract for a smartphone today, you would laugh them out of the room because you know the hardware will be a paperweight in 3 years. Why are sophisticated city managers saying yes to a decade of lock-in?
What's fascinating here is that the bundle actually solves the city's biggest administrative headache, which is budget shock. You have to look at the incentives from the perspective of the city manager and the police chief. You are right. Technology evolves rapidly. If a city buys a batch of body cameras today under the old CapEx model, they are obsolete in 3 years.
Right.
Which means the police chief has to go back to the city council in 36 months and start that political knife fight for surplus budget all over again.
Ah, okay. So the bundle eliminates the knife fight.
Exactly. With Axon's bundled subscriptions, specifically what they call their Officer Safety Plan, or OSP, the city pays a highly predictable, flat monthly fee per officer. In exchange, Axon provides unlimited cloud storage for the video evidence, access to the software ecosystem, and, this is the critical part, automatic hardware refresh cycles.
Okay, so the risk of obsolescence is shifted back onto Axon.
Precisely. Every 2.5 to 3 years, Axon just automatically ships the department the newest generation of body cameras. Every 5 years, they get the newest tasers. The city council loves this arrangement because the cost becomes a predictable flat line on their OpEx budget for the next decade. There are no sudden multi-million-dollar requests that require raising taxes or cutting other services.
And the police chief must love it too.
Oh, yeah. Because their officers are always equipped with the latest technology without having to play political games to get it funded. It completely aligns the incentives of the buyer and the seller.
That makes a lot of sense. The city is buying predictability, and Axon is buying unshakable loyalty. And the financial result of this strategy is totally visible in the numbers. Looking at the 2025 financial reviews in our sources, 95% of Axon's revenue is now subscription-based.
It is incredible.
They have taken a physical weapons company and completely saucified its balance sheet. It is really no wonder industry analysts have started calling Axon the Microsoft of law enforcement.
It is a very apt comparison. I mean, think about the moat Microsoft built in the enterprise space. A business doesn't just buy Microsoft Word anymore. They buy Microsoft 365. You get Word, Excel, Teams, OneDrive, SharePoint. And the magic is that it all talks to each other perfectly.
Right, and if you try to use something else, it breaks.
Exactly. If a rogue department in a company tries to use a non-Microsoft product, the friction is massive, the formatting breaks, the security protocols don't align, the cloud storage doesn't sync. Axon has built the exact same walled garden for public safety.
So walk me through what that walled garden actually looks like for a police department on the ground.
Okay, so an officer captures video on an Axon body camera. When they dock that camera at the end of their shift, the video automatically and securely uploads to the Axon cloud. It is immediately ingested and organized within Axon evidence.
Seamlessly.
Seamlessly. Then, if a case goes to trial, that exact video file, with an unbroken digital chain of custody, is shared directly with the district attorney's office via a tool called Axon Justice. It creates a single, unified source of truth for the entire justice sector.
Wow.
So if a budget-conscious mayor comes in and tries to force the department to buy a competitor's cheaper body camera, it won't integrate smoothly with evidence.com.
Ugh.
The officers would have to manually download, tag, and upload files, breaking the chain of custody and creating an administrative nightmare.
Which means the switching costs are effectively insurmountable. Once a city puts their evidence on Axon servers, they're never leaving. It is a concept called data gravity. The larger a mass of data gets, the harder it is to move, and the more applications it attracts.
Yep, that's exactly it.
But as powerful as that razor and blade model is, it was really just the foundational layer. Because recently, Axon flipped a switch that supercharged this entire ecosystem. They realized that having petabytes of video evidence just sitting on a server is a wasted asset.
Yeah.
So they moved from merely storing data to actively activating it.
And this brings us to the strategic inflection point that management calls the AI era plan. This is where Axon transitions from being a dominant software utility into a truly disruptive technology pioneer. The AI era plan is the catalyst currently driving their next phase of hypergrowth.
And the market adoption of this plan is wild. The financial success of the AI era plan right out of the gate is something you rarely see in enterprise software. In just its first full year, it generated $750 million in contracted bookings.
It's unbelievable.
Let that sink in for a second.
Yeah.
$750 million in future revenue committed to a brand new product line in 12 months. It is the fastest booked software product in Axon's history. And the absolute tip of the spear driving this massive adoption is an artificial intelligence tool called Draft One.
Draft One is the ultimate labor force multiplier. To understand why police chiefs are signing blank checks for this software, we really have to look closely at the daily reality of police work. Because pop culture tells us that policing is all high-speed car chases, dramatic interrogations, solving mysteries.
Right, like an action movie.
But the mundane reality is that an officer can easily spend 3 to 4 hours of an 8-hour shift sitting at a desk or parked in their cruiser, pecking away at incident reports. It is tedious, highly structured administrative data entry. Draft One fundamentally shatters that workflow.
So how does it actually work mechanically? Like, say I'm an officer on the street, I respond to a call. What happens next?
You respond to the call, and your body-worn camera is recording the entire interaction, both the video and the high-fidelity audio. When the encounter is over, the Draft One software utilizes the audio track from that specific body-worn camera. It feeds that audio transcript into a generative AI model, and within seconds, it automatically generates a highly structured, procedurally accurate first draft of the police report.
Okay, wait, I need to hit the brakes here because my alarm bells are ringing loudly.
Yeah.
We all use large language models now. We use ChatGPT, Claude, Gemini, and we all know the fundamental flaw of these models, which is that they hallucinate.
Right.
They make things up. They infer things that didn't happen because they are just trying to predict the next most likely word in a sequence.
Mm-hmm.
If an AI hallucinates a weird fact in a marketing email, you get a slightly embarrassing typo. If an AI hallucinates a suspect's confession or invents a detail about a weapon in a sworn legal document, you have a mistrial.
Absolutely.
You have a massive civil rights lawsuit. You have people going to jail for things they didn't do. How is this not an unmitigated liability nightmare for both Axon and the municipalities using it?
It is the most critical risk factor, and it is the exact question every defense attorney and civil liberties advocate asks immediately. And Axon was acutely aware that if Draft One hallucinated even once in a major case, the entire product line would be dead on arrival.
So what do they do?
To mitigate this, they engineered strict, non-negotiable human in-loop guardrails, and they fundamentally restricted how the AI operates.
How do you restrict an LLM from doing what it naturally wants to do, which is be creative?
By heavily constraining its context window, the AI model powering Draft One is strictly tethered only to the verified audio transcript of that specific encounter. It is hard-coded to ignore any outside information. It is not allowed to make deductive leaps.
So it can't guess.
No, it cannot guess what happened off camera, and it cannot infer a suspect's intent. It is solely permitted to summarize and structure what was explicitly spoken and recorded on the audio track.
So it is essentially a highly advanced stenographer, not an investigator.
Exactly. And the second layer of protection is the legal workflow itself. The software physically does not allow for an automatic submit to database function. The officer is legally required to review the AI-generated text, fill in specific contextual blanks like the physical description of the scene that wasn't spoken out loud, edit for accuracy, and physically sign off on the document.
So the human takes the liability.
Right. The officer remains the legally liable author of the report. The AI is merely an efficiency tool. But, the most surprising outcome of this entire rollout isn't how the officers are reacting, it's how the judicial system is reacting. You would assume prosecutors would be terrified to bring an AI-generated report into a courtroom.
Right, because any decent defense attorney is going to put that report on trial. They'll say, ladies and gentlemen of the jury, a robot wrote this, not the officer.
That was the fear. But in reality, prosecutors are finding that they actually prefer the Draft 1 reports.
Wait, really? Why? Why would a seasoned district attorney want an AI report over a human report?
It comes down to human memory degradation. Think about the biology of an officer working a long, stressful shift. They respond to a chaotic domestic disturbance at 9 p.m. Adrenaline is pumping, people are yelling. But the officer doesn't sit down at a terminal to write the report until 2 a.m. after responding to 3 other calls.
So they're exhausted.
Exactly. By that time, their memory of the exact phrasing a suspect used has naturally degraded. They are summarizing the event from a tired, stressed memory. The AI, on the other hand, doesn't get tired. It remembers the exact phrasing perfectly. It captures the entire transcript verbatim. Prosecutors are finding that Draft 1 reports are actually higher quality, more consistent, and provide a much clearer, more objective picture of the incident for a judge or jury.
Here's where it gets really interesting, because the financial implications of this tool for Axon are enormous. This isn't just a free feature update that they're throwing in to keep customers happy. This is a massive, deliberate driver for ASP expansion, average selling price.
Oh, absolutely.
Historically, Axon sold their basic software bundles for maybe $99 a month per officer. Is good business. But with the introduction of these premium AI-enabled plans, specifically the bundle they call the Officer Safety Plan 10 Plus Premium, bundled with the AI Era plan, they are aggressively migrating their entire customer base up the value chain. That top-tier bundle is now nearing $600 per officer per month.
Let's do the math on that. Going from $99 a month to $600 a month is roughly a 500% increase in recurring revenue per user. That is an explosive jump.
Right, and you have to ask the logical question, why on earth are highly constrained, budget-conscious municipal governments willing to pay a 500% premium for a software upgrade?
Because the return on investment, the ROI for the city, is immediate, quantifiable, and solves an existential crisis in law enforcement right now. Let's break down the labor math. If Draft 1 saves an officer 1 to 2 hours of paperwork every single day, you are effectively giving that officer 20 to 25% of their shift back.
Time that they can now spend actually patrolling the streets, responding to community needs, or maintaining a visible presence to deter crime.
Precisely. You are effectively increasing the street presence and operational capacity of your police force by 20 to 25% without hiring a single new officer. And this is happening in an era where police departments across the country are facing catastrophic recruiting shortfalls. Departments literally cannot find enough qualified cadets to fill their academy classes.
Right. Nobody wants the job.
And existing officers are burning out from mandatory overtime. So the city manager looks at the spreadsheet. They can pay Axon $600 a month for the AI software, which acts as a synthetic labor force. Or they can try to find, hire, train, equip, and pay the salary, healthcare, and pension of a new human officer, which costs upwards of $100,000 to $150,000 a year.
It's a no-brainer.
It really is. It is an ROI proposition that makes the $600 monthly subscription look like an absolute bargain.
It is a classic dynamic of technology replacing, or in this case, augmenting labor, but applied to the very rigid world of public safety. And it is driving incredible software margins for Axon. But there's a catch. All of this highly profitable software, all of these brilliant AI algorithms humming in the cloud are completely and utterly useless without the physical data collection points on the ground.
Yes.
You cannot analyze audio if you don't have a reliable microphone on the street corner. You cannot process video if the lens is covered in dirt or the battery dies halfway through a shift. And that necessity brings us to the physical foundation of this entire empire.
This is a crucial distinction that a lot of pure software investors miss when they look at Axon. It is easy to look at the massive software growth, the 80% gross margins on the cloud side, and dismiss their hardware business as a low-margin legacy division that they should eventually spin off. But that hardware is the bedrock of their entire strategic moat. Axon's hardware isn't just tactical gear anymore. It is a network of interconnected sensor portals.
Let's look at how those physical portals are evolving, starting with the TASER 10. The sources highlight this as a generational leap forward. To understand why, you have to look at the historical failure rates of the older tech. The older TASER models had some serious and frankly terrifying reliability issues.
Yeah, they really did.
Going way back to the early days, some of those models only had a 56% reliability rate in the field. A 56% success rate isn't a tactical weapon, it's a coin toss. You'd almost have better odds just asking a suspect nicely to put their hands behind their back. If an officer is facing a volatile, potentially life-threatening situation, a 56% chance of their primary non-lethal tool working is totally unacceptable.
It creates hesitation, and hesitation in those environments is extremely dangerous. The earlier models were typically limited to 2 shots. They fired 2 probes simultaneously, and both probes had to connect with the subject to complete the electrical circuit. If the suspect was wearing heavy clothing, or if they were moving erratically and one probe missed, the device failed.
And the range was pretty bad too, right?
Right, they had a very short operational range. If an officer missed both shots, they were out of non-lethal options, and the situation could rapidly and tragically escalate to lethal force.
So how does the TASER 10 fix the coin toss?
It completely overhauls the firing mechanism and the tactical paradigm. First, it offers a 45-foot range. That is a massive increase. It allows officers to maintain a much greater, safer distance from a potential threat, which de-escalates the tension immediately.
Wow, 45 feet.
Yeah, but more importantly, it doesn't fire 2 probes at once. It provides 10 individually targeted shots. The officer fires the first probe, which embeds, and then they can fire up to 9 more probes to complete the circuit. This effectively removes the psychological anxiety of missing that first shot and drastically increases the statistical probability of a successful, non-lethal incapacitation.
And while the TASER incapacitates, the cameras are evolving into active real-time sensors. We aren't just talking about a GoPro strapped to a chest anymore. The Axon Body 4 features bidirectional communication. It isn't just recording video to a hard drive to be reviewed by a jury a year later. It has an LTE connection. It is live streaming the event directly to a dispatch center, and the dispatcher can communicate directly back to the officer through the camera speaker. The hardware has become a real-time data portal.
Which brings up a fascinating point about Axon's competitive advantage. If we connect this to the bigger picture, you see exactly why software-only startups in Silicon Valley are completely locked out of this market.
Yes. I was just mapping this out in my head. Let's say a well-funded software startup in Palo Alto hires the best engineers in the world and builds the absolute greatest AI algorithm for analyzing police interactions. It is faster and smarter than Draft 1.
It doesn't matter.
Right. They will fail because they don't have the physical hardware strapped to the chests of hundreds of thousands of officers generating the proprietary, ground-level data required to train and utilize that AI. Axon owns the physical collection point. They own the portal. A software competitor can't compete with Axon's AI because they simply cannot access the data stream.
That proprietary sensor network is an unbreachable moat. No police department is going to wear 2 body cameras, one from Axon to satisfy their Evidence.com contract, and one from a startup just to test a new AI. Axon owns the real estate on the officer's chest, and management knows that the more physical sensors they deploy, the exponentially more valuable their software backend becomes.
So they're pushing to get cameras everywhere.
Which is exactly why they are not stopping at municipal police departments. They are aggressively expanding their total addressable market, or TAM. Axon currently estimates their TAM at a staggering $159 billion globally.
And a huge part of unlocking that $159 billion pie is breaking out of the government sphere and expanding into enterprise and retail sectors. Our sources detail a new product launching in the second half of 2026 called the ABW Mini Axon Body-Worn Mini. It is a much lighter, less visually intimidating body camera specifically engineered for retail workers, hospital staff, and private security.
This is a direct, calculated response to a changing societal and macroeconomic landscape. Across the globe, we are seeing rising rates of workplace abuse, highly organized retail theft that is crushing corporate margins, and alarming violence against nurses and frontline healthcare staff.
Yeah, you see it on the news all the time.
Exactly. These private environments don't need a heavy, ruggedized police camera that looks military grade. They need a subtle, lightweight device that looks like a name badge, but can act as a psychological deterrent and a high-definition recording tool when an incident occurs. By launching the ABW Mini, Axon is pivoting its massive, battle-tested cloud infrastructure into the private sector.
If you are holding Axon in your portfolio, this is the exact moment you need to pay attention. Why? Because private enterprise budgets dwarf municipal government budgets. A mid-sized city might have 500 police officers. A national retail chain like Walmart or Target has hundreds of thousands of employees. A massive hospital network has tens of thousands of frontline staff.
It's a completely different scale.
When you start selling hardware portals and software subscriptions to those entities, you are opening up a revenue stream that could eventually rival or even surpass their core law enforcement business. It completely redefines the ceiling for Axon's growth.
It absolutely raises the ceiling. But to truly achieve their vision of becoming the singular public safety OS, Axon realized a critical gap in their strategy. They dominated the physical encounter on the street with the taser and body camera. They dominated the post-encounter paperwork with Draft One and Evidence.com. But they didn't own the very beginning of the emergency lifecycle.
Right.
To control the entire ecosystem, they needed to own the moment the crisis originates. They needed to own the 911 call.
Which brings us to a massive wave of strategic acquisitions. Because Axon didn't just try to build this capability from scratch, they went on a billion-dollar shopping spree to buy the best technology in the space. Let's dig into Axon 911. They recently acquired two major players, a company called Prepared for $640 million and a company called Carbine for $625 million. That is over $1.2 billion in capital deployed just to attack the 911 dispatch market.
And it is a market in desperate need of a technological revolution. The legacy 911 infrastructure in most municipalities is shockingly antiquated. If you pull back the curtain on a 911 call center today, it is essentially the world's worst, most high-stakes game of telephone.
It's terrifying, honestly.
Think about the mechanics. A frantic citizen calls 911. That audio call goes through an analog telecom infrastructure to an operator. That operator is listening to chaotic audio and frantically manually typing notes into a computer-aided dispatch or CAD system that often looks like it was built in the MS-DOS era, black screens, green text. That operator then has to radio a dispatcher, who then radios a police cruiser, verbally relaying those typed notes over a static-filled frequency.
It's insane when you think about it. I can pull up an app on my phone and watch a pizza delivery guy navigate a map to my house in real time, down to the meter. But if I call 911, an operator has to verbally describe my location to a patrol car based on what I can desperately shout over the phone. It is slow, it is prone to catastrophic misinterpretation, and it strips away all the rich contextual data that every modern smartphone is constantly generating.
Precisely. And that is exactly what the Carbine and Prepared acquisitions are designed to fix. It shifts the entire emergency origination process into the cloud and leverages modern data packets.
Now, walk me through a 911 call in the new Axon ecosystem. How does this actually change the response in real time?
Let's take a hypothetical scenario. A citizen witnesses an armed robbery in a parking lot and dials 911 from their smartphone. The call routes through the Axon 911 ecosystem. Instantly, before a word is even spoken, the dispatcher isn't just getting an audio feed. The system processes the smartphone's metadata to pinpoint the exact GPS location on a high-definition digital map.
Wow.
Then, the dispatcher can send a secure link to the caller's phone requesting permission to activate the smartphone's camera.
So the caller essentially becomes a live, on-scene camera feed for the dispatch center.
Exactly. The dispatcher is now watching the emergency unfold in real time via live video. They can see the suspect, they can see the weapon, they can see the direction of flight. And crucially, all of that rich data, the live video feed, the exact GPS coordinates, the metadata, isn't verbally relayed over a radio. It is digitally routed directly to the dashboard screens inside the responding police cruisers in a matter of milliseconds.
That is incredible.
It bypasses the manual triage entirely. The responding officers literally have eyes on the scene before they even put their vehicle in park.
That is a total paradigm shift in situational awareness. But Axon isn't just relying on citizen smartphones to provide that video feed. They're building out a macro-level, citywide surveillance integration network. Let's look at another massive acquisition, the Fusus platform. Fusus is a company that specializes in building real-time crime centers, or RTCCs. Through Fusus, Axon has integrated over 300,000 fixed video streams from global logistics companies, retail chains, and private security cameras into a centralized single pane of glass dashboard for law enforcement.
It creates a unified visual network across an entire city. Going back to our robbery scenario, the suspect flees the parking lot. The dispatcher doesn't just have the 911 caller's video anymore. Through the Fusus dashboard, they can instantly pull up the live feeds from the security cameras on the street corner, the cameras inside the nearby retail store the suspect runs past, and the dash cams of the approaching police cruisers. The city becomes visually connected.
And what if the suspect runs into an area with no cameras? Like a park, an alleyway, an industrial complex. Axon has a play for that too, and it sounds like science fiction, but it is operational today. We have to talk about the DFR playbook, drone as first responder. Axon has partnered heavily with a drone manufacturer called Skydio. Let's trace our robbery scenario one step further. The suspect vanishes into a blind spot.
So what happens?
The dispatcher hits a button. Within seconds, an autonomous drone launches from a specialized dock on the roof of the nearest police precinct. It flies itself at high speed directly to the exact GPS coordinates of the 911 call, providing an aerial live stream to the command center and the responding officers before a patrol car can even navigate the local traffic.
It provides immediate, unblinking aerial overwatch. And while they're deploying friendly drones to secure scenes, they're also acquiring technology to secure the airspace against hostile drones. Axon recently acquired a company called Drone, which is a global leader in counter-drone security.
How does that fit into the public safety OS?
Think about massive public gatherings, the Olympics, the World Cup, the Super Bowl. These events are massive logistical and security nightmares. The threat of a rogue drone dropping a payload or disrupting an event is real. Drone provides the sensor networks and software to detect, track, and safely neutralize unauthorized drones in complex airspace.
And I should jump in here just to make a really important note. When you talk about 300,000 live cameras, autonomous drones flying 911 calls, facial recognition, obviously there are massive privacy and civil liberties concerns being debated globally right now.
Oh, absolutely. Heavy debates. And we aren't taking a political stance on whether this level of real-time surveillance is a positive or negative societal shift. We are just looking at the source material.
Right. And the sources note that Axon, in response to these tensions, has built an independent AI ethics board to navigate these exact concerns. But from a pure business strategy perspective, when you step back and look at the board, you see the master plan. Axon is layering AI software, body cameras, live smartphone video, automated dispatch, autonomous robotics, and counter-drone tech into a single, cohesive, subscription-based operating system.
It is an absolute fortress of technology, and all of these hardware portals, the AI labor multipliers, the billion-dollar strategic acquisitions, they all funnel into one of the most elite financial profiles in the entire industrial tech sector. Let's transition into the actual numbers and look at the financial realities for 2026, because a great story is useless if it doesn't translate into cash flow.
Let's do it. And the numbers they are generating are, frankly, astounding for a company operating at this scale.
When we look at the close of 2025, Axon reported a 33% year-over-year revenue growth, pushing their total top-line revenue to $2.78 billion. Growing at 33% when you are already doing nearly $3 billion in sales is incredibly difficult. But the metric that truly tells the story of their future health is their bookings. They saw an explosive 46% increase in contracted bookings year over year.
And that 46% explosion in new contracts has resulted in a backlog that is almost hard to comprehend. By the end of 2025, Axon reported a $14.4 billion backlog of future contracted revenue.
Wow.
To put that in perspective for you, Axon essentially has a shadow company of future revenue just sitting on its books waiting to be recognized. They have the $2.78 billion they made this year and $14.4 billion in legally binding contracts waiting in the wings.
That's insane. And management expects 20 to 25% of that $14.4 billion to convert into actual recognized cash revenue in the next 12 months. In the business world, that is the definition of ultimate revenue visibility. You aren't guessing what next year looks like, you already have the contract signed in a vault.
If we connect this to the bigger picture, the reason that backlog is so massive and the reason it continuously grows rather than shrinks comes down to one specific metric: net revenue retention, or NRR. In the SaaS world, NRR is the holy grail. It measures how much your existing customers are spending this year compared to what they spent last year, factoring in any customers who canceled, which is churn, and any customers who upgraded or downgraded.
Yeah.
Axon's NRR consistently sits at an incredible 124 to 125%.
Let's break that down into plain English for the listener because it is the most important number in this entire deep dive. An NRR of 125% means that even if Axon fired their entire global sales team tomorrow, shut down their marketing department, and didn't sign a single new police department or enterprise client for an entire year, Their revenue from their existing customer base would still organically grow by 25%.
Exactly. It mathematically proves two monumental things about their business. First, their churn is virtually zero. Because of the insurmountable switching costs and the data gravity of evidence.com that we discussed earlier, police departments simply do not leave the Axon ecosystem once they enter it. Second, it proves their land and expand sales strategy is executing flawlessly.
Right. They land the initial contract and grow it.
Yeah, they land the municipal customer with a basic entry-level body camera bundle. Then, over the next few years, they expand that contract. They upsell them to premium cloud tiers. They add fleet cameras for the cruisers. They sell them interview room recording software. And now they are migrating them to the $600 a month AI era plan. They continually squeeze more yield out of the same customer base.
And as they push more and more of these customers toward those software upgrades, it profoundly impacts their underlying profitability and margin expansion. Our sources detail a massive disparity in gross margins across their product lines. The hardware division, manufacturing the physical tasers and the body cameras, operates at roughly a 40 to 60% gross margin.
Which honestly is quite solid for complex physical manufacturing.
It is. But the software and cloud services division operates at margins in the high 70s to low 80s. And this is the core of the long-term financial thesis for Axon. As the high-margin software subscriptions become a larger and larger percentage of the overall revenue pie, the blended gross margin of the entire company naturally lifts. Based on this software mix shift, Axon management is aggressively targeting an EBITDA margin expansion of 250 basis points by 2028.
Okay, let's translate that. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It is basically a measure of the company's core operating profitability, and a basis point is 1/100%. So expanding by 250 basis points means they plan to increase their core profit margin by 2.5 full percentage points over the next few years.
Which might sound small, but
Yeah. On billions of dollars of revenue, an extra 2.5% dropping straight to the bottom line equates to hundreds of millions of dollars in newly generated free cash flow. They're already a cash-generating machine, but their financial architecture guarantees they will become increasingly exponentially profitable as they scale the software side.
it is an incredibly powerful financial engine. High top-line revenue growth, a massive $14 billion backlog, impenetrable competitive moats, and systematically expanding profit margins.
It sounds like a flawless setup, the perfect business. But we know that in the stock market, perfection comes at a very steep price. And when a stock is priced for absolute perfection, any stumble, any slight miss in quarterly execution, any macroeconomic headwind can result in a violent repricing. Which leads us to the critical counterweight of this discussion: market skepticism and risks.
As operationally dominant as Axon is on the ground, the financial markets are acutely aware of the high-wire act they are performing regarding their valuation.
Let's talk about the recent drawdown. Despite reported revenue, record bookings, and the massive success of the AI era plan, Axon stock recently experienced a bruising 38% drawdown. It dropped from an all-time high of around $885 down to the $450 to $500 range. Now, a 38% drop sounds terrifying on its face, but you have to look at the astronomical multiples the stock was trading at before the drop, and the premium multiples it still commands today. Even after the drop, Axon trades at roughly 13 times enterprise value to sales and a 60 times forward price-to-earnings ratio.
Those are absolute nosebleed valuations. Those are multiples typically reserved for hyper-growth, pure-play software startups in Silicon Valley that have zero physical supply chain constraints and infinite scalability.
Let's ELI 5. Explain, like I'm 5, that 60 times forward PE ratio. In plain English, a 60x forward PE means that investors are willing to pay $60 today for every $1 of profit the company might make next year. To put that in perspective, a mature, stable company might trade at 15 or 20 times earnings. Paying 60 times earnings means the market is pricing in absolute flawless execution and hypergrowth for the next 5 to 10 years.
This raises an important question, and it is exactly what skeptical Wall Street analysts are zeroing in on. To maintain that 60x valuation, Axon essentially has to grow its top-line revenue at 30% year over year.
And here's my pushback on the reality of that valuation. The law of large numbers dictates that compounding 30% growth on a $100 million base is hard, but compounding 30% on a $3 billion base is mathematically brutal. It gets heavier every single year. And they realistically walk this tightrope. Can they find 30% more revenue every single year when they already own the vast majority of the major U.S. municipal police market? There are only so many cops in America to sell body cameras to.
You are hitting on the exact ceiling of their historical business model. To maintain that 30% compounding growth, they cannot rely solely on U.S. municipal budgets anymore. They have to rely heavily on two new frontiers. First, international expansion, which currently sits at only about 17% of their total revenue. There is massive runway there, especially in Europe. Second, they have to successfully execute their push into the $159 billion enterprise TAM with products like the ABW Mini for retail and healthcare.
And if they failed?
If those new growth vectors stall, or if retail chains push back on the cost, the 30% compounding engine breaks. And if that engine breaks, a 60x PE multiple doesn't just slowly decline, it contracts violently.
The market will punish them. And there's another major internal concern that institutional investors constantly flag: stock-based compensation, or SBC. In 2025, Axon issued $634 million in stock-based compensation. That represents an astonishing 21% of their total top-line revenue given away as stock to employees and executives.
SBC is a highly debated, double-edged sword in corporate finance. Management, particularly CEO Rick Smith and the board, vehemently defends this practice. They argue that tying massive compensation packages to incredibly ambitious, high-risk performance goals aligns top-tier engineering talent with the shareholders. They want their software developers and executives to have a true co-founder mentality, deeply personally invested in the long-term success of the stock price.
I understand the psychological incentive structure. You want your best people hungry. But the math for the retail investor is undeniable. When a company issues hundreds of millions of dollars in new stock to employees, they expand the total number of shares in existence. That dilutes the ownership percentage of existing shareholders. Analysts know that this aggressive level of SBC creates a 2.5% to 3% annual dilution drag on earnings per share.
Right, it's a permanent hurdle.
Essentially, Axon has to grow its actual earnings by 3% every single year just to tread water and offset the dilution from the stock they're giving away. It is a significant hurdle built into the financial model.
It is a permanent headwind. And that headwind is compounded by external macroeconomic and regulatory friction. Let's look at the hardware supply chain. The hardware business acts as the crucial wedge that makes the high-margin software possible, but it is physically vulnerable. In the third quarter of recent filings, their hardware gross margins dropped from 54.5% down to 52.1%.
It's a drop.
CFO Brittany Bagley had to explain to analysts that this margin compression was largely due to rising global shipping costs and heavy tariffs on critical electronic components sourced from China, Taiwan, and Vietnam.
So geopolitical trade tensions and tariff wars in Asia directly impact the profit margin of the physical sensors on a police officer's chest in Ohio.
Exactly. The physical world has physical constraints, but perhaps the most existential risk lies on the software side, specifically regarding the rapidly shifting landscape of AI regulation. We spent a lot of time discussing the massive financial success of Draft One and the AI era plan. However, global governments are scrambling to draft legislation to govern artificial intelligence. Two major pieces of legislation, the EU AI Act in Europe and California's SB 524 in the US, threaten to impose heavy, costly, and incredibly complex audit requirements on AI-generated content.
Especially content that is going to be used as binding legal evidence to put someone in prison.
Precisely. If these new regulations mandate extensive manual human auditing of the AI algorithms, or if they slow down the legal certification process of AI tools in the judicial system, it could severely throttle the deployment speed and the underlying profitability of Axon's entire AI era plan. They could build the perfect software, only to have a regulatory body in California or Brussels say it cannot be used in a courtroom without a costly 3-year audit.
So we have to weigh the incredible strengths against the undeniable risks. On one side of the scale, you have elite SaaS economics, the unbreakable 125% net revenue retention, the staggering $14.4 billion backlog providing years of visibility, and the undeniable labor multiplying power of the AI tools. On the other side of the scale, you have a high-wire 60x valuation demanding perfection, consistent stock dilution from SBC, and looming global regulatory risks. Weighing all of that, we arrive at the final verdict for your portfolio.
When you synthesize all the data points, the 2028 vision for Axon remains structurally incredibly strong. Strategically, based on the analysis of these sources, the company is rated as a high-conviction defense tech asset. Management has laid out a very clear, mathematically sound path to reach $6 billion in annual revenue by 2028.
Which is massive growth.
Massive. And despite the very real valuation and regulatory risks we just unpacked, that path to $6 billion is significantly de-risked by their core engine, the 125% NRR. Because of the data gravity of evidence.com, their current customers will carry them most of the way there. Furthermore, their massive international momentum, highlighted by recent nine-figure deals in Europe, where the new, longer-range Taser 10 is uniquely appealing to historically unarmed police forces, provides the necessary expansion runway to sustain their required compounding growth.
So what does this all mean? We have spent the last hour breaking down the granular mechanics of a business that has completely revolutionized how law enforcement and emergency response operates globally. But I want to leave you with a final thought to mull over, a thought that goes beyond the balance sheets and the EBITDA margins.
Hmm.
Throughout Axon's history, from the original stun gun to the early body cameras, their technology has primarily been used to document the past. The camera was designed to passively record an event so it could be reviewed later by a supervisor or a jury. They were tools of historical accountability.
Right.
But as Axon stitches together autonomous Skydio drones, instant 911 smartphone video feeds, real-time AI transcription, and 300,000 live surveillance cameras across the city into a single, unified AI-driven command center, their fundamental nature is changing. They're actively shifting from a company that simply documents the past into a company that possesses the theoretical technological capability to predict and preempt the future. When an AI can instantly analyze a city's live video feeds, cross-reference it with 911 metadata, detect an anomaly, and deploy an autonomous drone to a GPS coordinate before a crime is even officially reported, we have entered an entirely new paradigm of public safety. How will society, the judicial system, and the balance of civil liberties adapt when the public safety OS becomes proactive rather than reactive? It is the question that will define the next decade of this industry and the next phase of this company's evolution. Thank you so much for joining us on this deep dive into Axon Enterprise. Risk defined, portfolio protected.